Hey everyone, let's talk about what is happening when Bitcoin's price starts to rise and then it falls back. And then it tries to rise again and then it falls back. And just when you're getting your hopes up because it's rising again, then it falls back. What's actually going on behind the scenes there? Well, first of all, Bitcoin is one of the first opportunities typically that people have experiencing something that is affected by the laws of supply and demand. So every stock, every bond, every commodity, basically everything you buy or sell in your life is affected by the laws of supply and demand, but almost none of those things are globally traded 24/7. In fact, none of those things are globally traded 24/7 other than Bitcoin. So when people buy Bitcoin for the first time, it's usually the first time that they've experienced an asset that they can watch the price go up and down literally every second of every day as long as they want, no matter how long they want to do it. And that is a new experience for most people. Even the stock market, if people own individual stocks like Tesla or Amazon or Apple or Microsoft or Google or Facebook or Nvidia or something like that, even those stocks only trade during stock market hours. And the stock market is only open 6.5 hours per day. And it's closed on, bank holidays and all that. So the stock market only trades 19% of the time, 19% of the time. That means 81% of the time the stock market is closed, which means the vast majority of the time that you check the price of a stock, it's not going to be moving because the stock market's closed, which means the price is not moving. So what is going on when Bitcoin rises and then falls and then rises and then falls? Well, so what's happening is you are experiencing supply and demand upfront and personal, and you're seeing it completely unfiltered. So let me tell you what happens when the price rises. So this morning, I woke up, I checked the price of Bitcoin. It is $109,500. So $109,500. So when the price starts to rise from 108,000 to 109,500, the very first thing that happens is idiot day traders who are trying to time the market by buying when it ticks up and, selling when it ticks up, buying when it ticks low, and doing that over and over and again. Those day traders sell when the price starts to rise. Now, virtually all of those people lose money. I do not ever recommend anyone try day trading. It is a loser's game. Everyone who tries it, literally more than 99% lose money. Don't do that. But there are people that are convinced that they are special, that they can do that. So when the price ticks up, those people start dumping the day trading Bitcoin. So that is one of the reasons the price starts to go back down when it rises, is because you've got day traders dumping it. Another reason is you have funds that are rebalancing. So if somebody has a fund that they want to be 20% Bitcoin and 80% other stuff, and the price of Bitcoin goes up by 5% or 1% or 2%, suddenly their fund is overweight in Bitcoin. And anytime their fund becomes overweight in anything, whether it's Bitcoin or Tesla stock or anything else, they sell some of the thing that went up and rebalance by buying some of the other assets that are lower by comparison. So if that fund edges up to, it used to be 20% Bitcoin, and now because the price of Bitcoin went up, it's 21% Bitcoin and 79% everything else, they will sell 1% of the fund of the Bitcoin, which is about 5% of their Bitcoin. They will sell that, and then they will use that money to buy more of whatever represents the 79%, so that it is back to balanced at 80-20. So that happens. Also, everybody who owns Bitcoin, when the price rises from $108,000 to $109,500, a bunch of people feel slightly wealthier. And when people feel slightly wealthier, they decide to use some of their Bitcoin to improve their lives in some way. So, for example, I keep very, as far as improving life, the major purchases I've made recently is I installed a generator at my house so that my electricity stops going out, because Entergy, to save their lives, cannot seem to keep the power on. It's constantly going out, about once every week or two, which is absolutely insane. But anyway, I bought a generator. Now, I'm still accumulating Bitcoin with every paycheck every 2 weeks, but that generator cost more than a handful of paychecks. So as a result of that, when the price goes up, people start feeling like they can afford a vacation or a generator or a new car or an add-on to their house. So as the price goes up, people who have been holding Bitcoin a long time decide that they are now wealthy enough that they can afford to buy things. And so they may liquidate $500 a Bitcoin or $1,000 a Bitcoin or substantially more if they're buying something, a nice vacation or something like that. So that is happening. And so then you're dealing with, people with emergencies that, they've been waiting to liquidate some Bitcoin to pay off a medical bill. And they didn't want to do it at $108,000 Bitcoin, but now at $109,500, they're like, I really ought to pay off that medical bill. And so they liquidate some Bitcoin. So as the price rises, everybody who could possibly want to liquidate Bitcoin for any reason looks at the price and they're like, ooh, it's up a little bit. I'll liquidate just a little bit. Now, the reason Bitcoin's price always eventually goes up is that those people can only liquidate the same Bitcoin once. So once someone has sold some Bitcoin to buy a generator, or they have sold some Bitcoin to go on a nice vacation, or buy a car, or put an add-on on their house, or pay for a medical bill, they can't sell the same Bitcoin a second time. Which means, essentially what's happening as the price goes up, all of that Bitcoin that is now mobile, that is now willing to move at a price of $109,500, can only be sold once. And so all that has to happen for the market to readjust to a new price is for the people that are willing to sell at $109,500 to effectively get that Bitcoin out of their system and for it to be bought up by the marketplace. Now, the exact same thing is happening on the demand side as is happening on the supply side. So every time the price starts to fall back as a result of all of these things we've just been talking about, there's people like me out there who are like, ooh, it's back to 108,000. I better go see if there's any money I can scrap together to go buy some more Bitcoin. There's people who are buying Bitcoin for the first time that they check the price and they're like, 109,500, that's kind of expensive. Maybe I missed it. Maybe I'll sit on the sidelines. Then, as a result of the price getting pushed down by all of the people who do all of the things I've just been talking about, those people check the price. They're like, ooh, $108,000 Bitcoin. Now, 109,500 seemed a little expensive, but now that it's back at 108, maybe I'll load up on some Bitcoin. So every time the price goes down, the reverse happens, which is all the people who have a reason to buy Bitcoin, they're rebalancing funds, they've got some extra cash available, their paycheck hit, they're starting to understand Bitcoin better, and they want to increase their allocation of their net worth from 1% Bitcoin to 5% Bitcoin, or 5% Bitcoin to 10% Bitcoin. All of those people, as the price drops, buy more Bitcoin, which pushes the price back up. Now, there's 95% of the world does not own any Bitcoin, and only 5% of the world does own Bitcoin. So over time, the 95% is always going to outrun the 5%, because the 5% of people who own Bitcoin can only sell their Bitcoin once, and the 95% of the people who do not own any Bitcoin have way more money than the people who own Bitcoin have Bitcoin to sell. So if you think about it, imagine two piles of Bitcoin. One's like, 5 feet tall, which is the 5%. So there's like a 5 foot tall pile of Bitcoin, and that's the people who already own it, and that's their Bitcoin. And every time the price tries to rise, they sell a little bit, and it pushes the price down, which means the stack that they have that they're sitting on is slightly smaller. Now imagine a stack of US dollars that is 20 times as tall. That is 95 feet tall of US dollars that can be converted into Bitcoin. Again, there's way more dollars in the system than there are Bitcoin in the system. There's way more assets. The total assets of the world is about 1,000 trillion dollars. So if you add up all of the assets that people own in the entire world, it's about 1,000 trillion, which is like a quadrillion or a quintillion. It's one of those two. I think it's quadrillion. Anyway, that's all the assets. That's real estate, stocks, bonds, all fiat currencies combined, basically precious metals, jewelry, Picasso paintings, every conceivable thing of value that people own in the entire world is worth about 1,000 trillion dollars. Bitcoin only represents $2 trillion. That means Bitcoin is 0.2%, 1/5 of 1% of the assets that people own in the world. That's a tiny percent. It's 2%, so 2 trillion is 2% of 100 trillion, which means it's 0.2%, 1/5 of 1% of 1,000 trillion, which is all the assets in the world. So what's happening over time is more of that 1,000 trillion in assets are pouring into Bitcoin, and inevitably over time they overwhelm the people who are willing to sell their Bitcoin at 109,500 or 112,000 or whatever it is. And when that demand overwhelms the supply, it pushes the price higher because, again, all of those people that are selling can only sell once. So once they sell, they don't have that Bitcoin to sell again. So the next time the price goes up to 110,000, all that Bitcoin that got sold at 109,500 can't be sold by the same people over again. And the people who bought it at 109,500 don't want to sell it at 110,000 because that's like 0.5% profit. It's like nothing. So inevitably over time, the people who are selling get overrun with the demand of the people that are buying, and then the price goes up. So when the price reaches a new level, so we're about 50% higher than the maximum price that was reached for the 8 months that Bitcoin traded between 55,000 and actually I've got an incoming call, so I got to take this. So we're up about 50% already from the highest price that Bitcoin hit for about 8 months of last year. And, and it's taken time to digest that. So last time it took about 8 months to digest a 50% price movement, and now we're up 50% higher. And I don't know how long. It's been 7 months since we first crossed $100,000. So I'm expecting any day now to definitively break above $110,000 and stay there, hopefully forever, but at least a long time. And we might get some temporary price dip that drags it under there temporarily. But anyway, I'm expecting that to happen anytime. I don't know when that's going to happen. It's like a pig in a python, and it feels like it's been long enough that it's about time where all of the Bitcoin that wanted to be sold at any of the price points that we've been around, it feels like it's had about as much time as it needs to be sold at those price points, which means I'm expecting any hour now or any day now for the price to relatively rapidly go to $120,000 to $125,000, which is what James Check predicts will be sort of the next range that we'll have to spend some time at, and then up from there. So anyway, it feels like enough time has passed. Could be any minute, could be any day, could be any week, could take more time. I don't know, but now continues, in my opinion, to be a great time to buy Bitcoin, and it's only a matter of time till the demand outstrips the supply and the price goes up. Have a great day, everyone. Thanks.